Understanding the long call butterfly strategy. The long call butterfly is a neutral to bullish option strategy designed to profit from an underlying asset that is expected to remain within a specific price range by expiration. It involves a combination of 3 call options with the same expiration date but different strike prices. 1. Buy 1 in-the-money ITM Call. This is the lowest strike price. 2. Sell 2 at-the-money 8 calls. These are the middle strike price. 3. Buy 1 out-of-the-money OTM Call. This is the highest strike price. The strategy aims for a defined maximum profit and a defined maximum loss, making it a limited risk and limited reward strategy. The goal for minimum profit often involves the underlying asset finishing exactly at or very close to the short call strike price, the middle strike. The minimum profit goal. While the maximum profit for a long call butterfly occurs if the underlying asset's price is exactly at the middle strike at expiration, minimum profit, in this context, usually refers to ensuring the strategy is profitable, even if the price deviates slightly from the ideal peak, or simply exiting the trade with a small gain if the market doesn't move as expected. For this example, we'll illustrate how the structure inherently creates a profit zone and how to calculate the thresholds for any profit. Step-by-step example. Long call butterfly with Bitcoin. Hypothetical. Let's assume the current price of Bitcoin, BTC, is $65,000. We want to implement a long call butterfly strategy with an expiration date of approximately 1 month out. Goal: structure a long call butterfly to generate a profit if BTC stays within a certain range, with an emphasis on understanding how to secure any profit, even a minimum one. Step 1. Select the underlying asset and expiration date. Underlying asset: Bitcoin, BTC. Current BTC price: $65,000. Expiration date: August 15th, 2025. Approximately 1 month out. Step 2. Choose your strike prices. The strike prices should be equidistant. The middle strike will be your body and is usually close to the current price. The lower and upper strikes are the wings. Lower strike, ITM call. Let's choose $60,000, buy 1 call. Middle strike, ATM, near ATM calls. Let's choose $65,000, sell 2 calls. Upper strike, OTM call. Let's choose $70,000, buy 1 call. The distance between strikes is $5,000. $65,000. $60,000 equals $5,000 and $70,000. $65,000 equals $5,000. Step 3. Determine the premiums. Hypothetical. These premiums are illustrative and would vary significantly in a real-world scenario based on implied volatility, time to expiration, and market demand. I. Buy 1 BTC call at $60,000. Strike. Premium equals $5,500. Sell 2 BTC calls at $65,000. Strike. Premium per call equals $2,000. Total $4,000 received. Buy 1 BTC call at $70,000. Strike. Premium equals $800. Step 4. Calculate the net debit/credit. This is the initial cost or credit to enter the trade. Net debit equals premium of long ITM call plus premium of long OTM call, 2 premium of short ATM calls. Net debit equals $5,500 plus $800, $2,000. Net debit equals $6,300, $4,000. Net debit is in $2,300. This $2,300 is your maximum potential loss. To make a profit, the strategy must return more than this initial debit. Step 5. Calculate break-even points. A long call. Butterfly has 2 break-even points. Lower break-even point, lower strike plus net debit of $60,000 plus $2,300, $62,800. Upper break-even point. Upper strike net debit $70,000, $2,300 EBOS, $67,1700. For the strategy to be profitable at expiration, the price of BTC must be between $62,300 and $67,1700. Step 6. Calculate maximum profit. Maximum profit occurs if the underlying asset's price is exactly at the middle strike price, $65,000, at expiration. Maximum profit equals difference between adjacent strikes, net debit. Maximum profit equals $65,000, $60,000, $2,300. Maximum profit equals $5,000, $2,300. Maximum profit equal $2,700. Step 7. Calculate maximum loss. Maximum loss occurs if BTC price is below the lower strike, $60,000, or above the upper strike, $70,000, at expiration. Maximum loss equals net debit equals $2,300. Step 8. Payoff diagram analysis. Illustrative scenarios at expiration. Let's examine the profits or loss at various BTC prices at expiration. Scenario A. BTC at $59,000, below lower strike. O. All calls expire worthless. O. Loss equals net debit equals $2,300. Maximum loss. Scenario B. BTC at $62,300, lower break-even point. O. $60,000, call as ITM. Intrinsic value equal $62,300. $60,000 $300. O. Other calls worthless. O. Profit/loss equals $2,300. From 60K call, $2,300. Net debit is $0. Scenario C. BTC at $65,000. Middle strike, maximum profit point. O. $60,000, call as ITM. Intrinsic value equal $65,000. $60,000 is $5,000. Long. O. $65,000, calls are ATM. Worthless, short 2. O. $70,000 call is OTM. Worthless, long. O. Profit/loss equal $5,000. From 60K call, $2,300. Net debit equals $2,700. Maximum profit. Scenario D. BTC at $67,700. Upper break-even point. O. $60,000 call as ITM. Intrinsic value equals $67,700. L. $60,000 EC. $7,700. Longs seeing. O. $65,000 calls are ITM. Intrinsic value equals $67,700. $65,000 equals $2,700 each. Short 2 extra $5,400 loss this. O. $70,000 call is OTE. Worthless long ling. O. Profit loss equals $7,700. From 60K call, $5,400. From 65K and calls a $2,300. Net debit $0. Scenario E. BTC at $71, above upper strike. O. $60,000, call as ITM. Intrinsic value equals $71,000. $60,000 equals $11,000. Long. OC $65,000 calls are ITM. Intrinsic value equals $71,000. $65,000 equals $60,000 each. Short 2 is to $12,000 loss. $70,000 call as ITM. Intrinsic value $71,000. $70,000 is $1,000. Long. O. Profit loss $11,000 plus $1,000. $12,000. $2,300 E to $12,000, $12,000, $2,300 E, $2,300 E, maximum loss. Step 9. Strategies for aiming for minimum profit. The minimum profit for a butterfly typically refers to any positive profit within the break-even points. To aim for this, consider these points. 1. Careful strike selection. Choose strikes that reflect a realistic expected price range for the underlying asset. If you believe BTC will consolidate around $65,000, this setup is suitable. 2. Monitor volatility. Implied volatility, IV. IV can significantly impact option premiums. O. Entering the trade. You generally want to buy butterflies when IV is relatively low, as you are a net buyer of volatility when setting up the spread due to the net debit. O. During the trade. A decrease in IV can be beneficial if you are looking to close the trade early for a profit, especially if the price is near the middle strike. 3. Time decay, theta. Butterflies are positive theta strategies, meaning they profit from the passage of time, especially as the expiration date approaches, assuming the underlying price remains within the profitable range. O. Don't wait until the last day. While maximum profit is at expiration, aiming for minimum profit often means closing the trade before expiration, especially if the price is hovering around the middle strike. This captures some profit from time decay and avoids the binary outcome at expiration. 4. Early exit strategy. O. Profit target. If BTC moves into your profit zone between $62,300 and $67,700, especially near $65,000, and you see a small profit, e.g., 20 to 30% of your max profit, or just enough to cover transaction costs and a little more, consider closing the position. You can close the entire spread by placing a good till canceled GTC order for the net credit you desire. O. Risk management. If BTC moves sharply outside your range, consider exiting early to prevent a full maximum loss, although the maximum loss is already defined. 5. Adjustments. Advanced. In some cases, if the underlying moves significantly, advanced traders might consider adjusting the spread, but this adds complexity and additional transaction costs. For a minimum profit focus, a simpler set and forget or early exit approach is usually preferred. Important considerations for USA crypto options trading. Regulatory landscape. Cryptocurrency options trading in the USA is offered by regulated exchanges, e.g., CME Group for Bitcoin and Ethereum futures options, or other platforms for direct crypto options. Ensure you are using a legitimate and regulated platform. Liquidity. Options on less popular cryptocurrencies or with very wide strike differences might have low liquidity, leading to wide bid-ask spreads and difficulty in getting desired fills. Stick to highly liquid assets like BTC or ETH options. Margin requirements. Selling options involves margin requirements. Understand these fully to avoid margin calls. Tax implications. Profits from crypto options trading are subject to capital gains tax in the USA. Consult a tax professional. Volatility. Crypto markets are inherently volatile. While the butterfly limits risk, large price swings can still move you quickly out of your profit zone. By following these steps and understanding the mechanics of the long call butterfly, you can structure a hypothetical trade with a clear understanding of its potential profits and losses, and how to aim for securing any profit within its defined range. Remember, this is a hypothetical example, and real-world trading requires meticulous research, risk management, and up-to-date market information. Please like, subscribe, and comment.